I'm going to talk, as Daniela said, about the largest risk humankind currently is exposed to, as defined by the world's economists. And I don't have to introduce Munich Re. I think to you, a leading reinsurance company with an annual premium in reinsurance around 28 billion euros. And we also have kind of a leading role in insurance of natural disaster losses, and there climate change comes in because 90% of all global insured disaster losses in the last 40 years or so have been caused by weather-related events, and they potentially are influenced by climate change. And this has led to the fact that climate change already in the 1970s has been addressed by Munich Re as a potential changing risk in respect to the weather patterns, especially the extreme weather patterns, and you can read this in a publication by Munich Re dating back to 1973 already. Here now I get to the title, and it's really hard to read. This is not my fault, but the World Economic Forum has printed this in a way which is hard to show on a slide. What do you see here? You see a risk landscape. This means here on this axis the likelihood increasing from the left to the right that risk is going to become real. And up here you see the economic impact. So up here in this right uppermost area you find the most probable risks and the risk with the highest economic effect. And this is enlarged what you see here. And the risk with the highest economic impact is defined here as failure of climate change mitigation and adaptation. For the first time, the world economists have put it on rank number one in this respect. So if we fail, if we are not clever enough to mitigate climate change, but also to adapt to the unavoidable changes, then this will cost us a lot of money. And I will get now into some facts of climate change and some ideas on how insurance can contribute to manage this risk of humankind. First of all, what is the state of the climate? And I dare to say it's scaring, because we had 2 record years in terms of highest temperatures since measurements began in 1880. 2014 has been the warmest year on record, and this has been beaten by 2015. And now 2016 has started again as the warmest year, with the first 5 months being the warmest months on record since 1880. What you see in this figure is the temperature anomaly in respect to the mean value 1981-2010. You see a lot of red, which means it has been a lot warmer, especially in Alaska and in Central Asia, Siberia. And you see that this is the mean for the first 5 months, January to May 2016. So climate change is real, is there, and it seems to be accelerating. Certainly the El Nino also contributed somewhat to these record temperatures. Here you see the course of the annual global temperatures since 1880, and you see how far off 2015 has been. This is 2014, this is 2015, and you see this strong increase since about 30-40 years from one year to another. We have some fluctuations with the La Nina, El Nino influences, but on the long term we see this almost steady trend upwards. And it has been clear for quite some time that greenhouse gas, carbon dioxide, is contributing most to this anthropogenic human-made climate change. CO2 is emitted whenever we burn fossil fuels, be it oil, coal, or natural gas. And this, what you see here, is the measured environmental concentration of CO2 at a measuring site of the US Weather Service NOAA on Mauna Loa in Hawaii. They started already in 1958 to measure these environmental concentrations, and so there we have the longest real measured course of values in the environment. And you see this steady increase. You see the decadal increases, and I'm going to compare the inclination, which is the increase per decade in the 1960s, to what we have seen in the last 6 years. And oh, you see it here, you don't see it unfortunately there. It's lagging behind a little bit. Okay, but the message is that the increases in the environmental concentration of CO2 are getting steeper and steeper, which means from year to year there is more CO2 getting into the atmosphere. One of the latest readings, we have now reached a level of 407 ppm, so the 400 ppm have been transgressed about 2 years ago. So what does the IPCC, the Intergovernmental Panel on Climate Change, which we think is the authority for climate research, more than 2,000 scientists are contributing to these assessment reports, which are published every 6 years or so. And the last one of Working Group 2, which deals with the impacts of climate change, has been published in 2014, and some of the essential messages are more frequent and severe extreme events will increase losses and loss variability. So this is what affects us directly. Then you can read changing loss patterns will challenge insurance systems to offer affordable coverage, provide more risk-based capital because of the higher variability, volatility. So these climate researchers even deal in concrete ways with the insurance industry. And also a very important message is that there will remain uncertainties. So it's really hard to predict how climate change will affect certain regions, especially the weather extremes. So we will have to live with these uncertainties, and our risk management has to deal with it, and this requires some kind of iterative risk management. Whenever we learn more, then we should consider this in our risk models. As you know, Munich Re has started quite early, also in the 1970s, to collect data on all kinds of losses caused by weather-related and also geophysical events. We have put together this Munich Re NatCat service database, currently reflecting 36,000 data sets. And just to show you one of the major findings, this shows the trend of the loss-relevant events globally for the different peril families. Red is what comes out of the Earth crust, earthquakes, tsunamis, volcano eruptions. You see these red bars here. Then green are all kinds of storms, blue the flood events, river floods, storm surges, flash floods, and orange other weather-related events like extreme temperature, drought, and forest fire. And you see that there has been a clear increase in the number of the events, and all of this increase is driven by the weather-related events. You don't see this trend for the geophysical events, and this is exactly the pattern you would expect if changes in the atmosphere, especially climate change, is one of the drivers, because this doesn't affect the geophysical events, it just affects the weather-related events. Now let's have a look at one special peril, and this is quite a recent thing. You have seen the photos of flooding, and we have had about 4 weeks now here in Germany and in other parts of Europe with a persistent weather pattern generating thunderstorms and flash floods. And as already said, and we have analyzed this, most of the losses have occurred in a low risk class for flooding. So almost all of these buildings could have had insurance without any problem. And this is the characteristic of flash flood in contrast to river flood. Flash floods can occur everywhere, and they are kind of chaotic, and one year they occur in this place, other year in other places, and this makes them easily insurable. We had quite some strong events also in previous years, as for example in 2013, the most expensive hail event on the globe occurred here in Germany, with 2 lines of hail, one in Lower Saxony, North Rhine-Westphalia, and one in Baden-Württemberg. And these 2 hail lines coming or being generated by the same low-pressure system caused overall losses of 3.6 billion euros, and 2.8 of it insured. There is not that big insurance gap because this is covered, hail damage is covered by the normal fire and residential home insurance. So you see this billion losses just in a day or so caused by by hailstones having diameters larger than tennis balls. In the next slide, you see the convective storm Ila, just 1 year later in 2014, affecting France, Belgium, and Germany. Again, a several billion, in this case it's in dollars, dollar loss. You again see the high insurance penetration and the high ratio which has been insured. In the next slide, you see the most recent event. You see this is an event not far away from here, about 80 kilometers in Simbach in Lower Bavaria, and but also Baden-Württemberg had been affected. And this is a flash flood. This is not a river flood. And the latest assessment of losses has been just released by the GDV last week, and the assessment has been that these 2 events result in an insured loss of 1.2 billion, which we assess would result in a total economic loss of about 2.5 billion. Because it is mostly driven by floods, and in this area in Bavaria, the penetration of this flood insurance is only 27 or 28%. So let's have a look at the special trend of these convective storms, thunderstorm-related loss events, and there you see also for Europe, you see this strong increase in the number of the events. And if we look at the losses, and they are inflation adjusted in this case, so you don't find any inflation there anymore. You see this strong increase, especially in the last years. 2013, with this strong hail event, has been the record year by now, and you see the high insurance penetration. The blue bars are the insured losses, and the green bars are the overall losses. We have started already several years ago to do some basic research on the processes behind these thunderstorm-related events, and we started in the US because in the US we find the same trends. We find strong increases in the numbers of the events and also in the losses. In the year 2012 in the United States, the accumulated losses of thunderstorm-related events has almost reached 50 billion US dollars. So what we have done is we have performed a study on the basis of our loss data and also on the basis of the meteorological data. What we have put together is all the relevant loss events east of the Rocky Mountains. And we had the meteorological data from 1970 onwards. We received them from NCAR in Boulder in Colorado. We went there with a hard disk drive because it's so many data, you can hardly transfer that. And analyzed these things together. First, we normalized the losses, which is more than inflation adjustment. So we calculated how high would the loss be with the exposure of today. And after normalization, we still found increases, which means we cannot explain the total increase of the losses by just higher values exposed. We have to explain it also on the hazard side, on changes in the atmosphere, and actually these increases correlated with the increase in the meteorological potential for severe thunderstorms, especially driven by water vapor, by humidity of the air. There is evidence that climate change has resulted already in an increase in humidity of the air. This is due to the warmer sea surfaces, which are evaporating more water into the atmosphere. The atmosphere gets warmer, can hold more water vapor, and so the potential of big downpours, but also of intense convective, but also tropical storm events has increased because there's more energy in the system. Water vapor means energy because it releases the whole evaporation energy when it condenses, when clouds are formed, and the more water vapor you have in the atmosphere, the more energy can be released. So this has been one of the studies for the first time. We could show that climatic changes have already influenced the US thunderstorm losses. We are right now about to do a similar study here in Europe, Germany, other European countries, where we do the same. We bring our loss data together with the meteorological data, and in a year or two from now, we think we will have some results showing whether we see the same process as we have seen in the United States. One example, we also see things in heat waves and related loss things or events caused by heat waves, droughts, for example, in agriculture. So what can we do about it? The first thing certainly is we have to look for the people who are most vulnerable and suffer most by climate change, and this is not us here in Europe, not people in the United States or in other rich countries, because we have the capacity to adapt to unavoidable changes, to insure ourselves and things like that. But people in developing countries, they don't have this capacity, and on the other hand, they have not contributed to the problem, so they are suffering from something they have not caused. It's the industrialized countries which have caused the problem. So to organize a transfer of knowledge, but also some material help to people in developing countries on the basis of insurance-related things. Insurance definitely can help there. We founded the Munich Climate Insurance Initiative as a think tank, a non-profit organization working together with the World Climate Negotiation Process, the UNFCCC, and discuss our suggestions with the delegations there. And actually we have come quite far. There have been some agreements at this Conference of Parties, which is the climate negotiations. In Cancun in 2010, it has been the decision on a loss and damage program, which then has been sharpened in Warsaw at the next climate summit with the Warsaw International Mechanism, which is a risk transfer mechanism for people in developing countries. Exactly what we have discussed at MCI and what we have suggested. Then we have, as MCI, we have received some money to test some micro-insurance products for poor people on 3 Caribbean islands, St. Lucia, Grenada, and Jamaica. And this is the most recent development. Last year, it's just 1 year ago, here in Bavaria, there has been the G7 summit, and at this G7 summit, there has been a decision on the initiation of a climate insurance project. And you also find in the Paris Agreement some reference to insurance. Let's have a closer look on this climate insurance project. So the G7 decided on a 5-year project to support people in developing countries to protect themselves against economic consequences of extreme weather events. And there is an ambitious target. The target is to bring 400 million additional people some basic insurance protection against extreme weather events. 300 million of them with indirect insurance, so the government buys some kind of insurance, but for 100 million which get a policy themselves, so they are insured directly. So right now the G7 governments have pledged 420 million US dollars with the option of more to follow later to finance the implementation of these insurance products. We from the Munich Re side, but also with MCI, we had been involved with the German government in the preparation of this G7 initiative, and now we are kind of on basis of MCI consultants to this project to bring in the insurance expertise to set this project on the right tracks. What has been the result of Paris? We have been at Paris. Munich Re has a long tradition. We have been at all COPs, starting at COP1, and the last in Paris has been COP 2021. it has been a breakthrough. I really assess this as a real positive result. For the first time, all 195 countries have agreed to sign a common treaty which will become legally binding even, and in this you can read that there is a goal of holding global warming not only below but well below 2 degrees, aiming even for 1.5 degrees, and there will be climate finance by 2020. The industrialized countries have promised to bring together $100 billion every year to be used for people in developing countries, and for example, insurance subsidies for climate risk insurance could be part of that. And climate insurance also has been part of the agreement. You can read in paragraph 49 in the Paris decisions and Article 8 in the agreement about insurance as being part of the solution in terms of adaptation. And there are more and more studies showing the value of insurance for national economies. There are 3 different groups who have done similar studies, who have analyzed the economic growth pattern, the GDP pattern after large natural disasters, and this in relation to the insurance penetration in the different countries. And all of them have found that a higher level of insurance cover is accompanied by significantly better economic performance, followed a catastrophe, and depending on the type of catastrophe and the level of economic development, insurance cover can even offset the negative indirect effects of natural catastrophes on national economies. We have seen this after Katrina, for example, in the United States in 2005. Katrina, which has resulted in losses of more than 100 billion US dollars. But a lot of this has been insured, about half of that, and there has been much money pumped into the economy, which even has resulted in a GDP growth after Katrina. Poor countries would have a deep dip of their GDP and have a hard time to ever come back on the previous level. So insurance definitely plays an important role, and as climate change goes on, I think this role gets even more important. And this is just has been just released 2 months ago or 3 months ago in Nature Climate Change. It's an analysis how insurance can support climate resilience, and it starts with a sentence: insurance is gaining importance in and beyond the climate negotiations and offers many opportunities to improve climate risk management in developing countries. Just to before I come to the end, I would like, as an example, show you how our strategy on climate change management is set up. It's set up on 3 pillars. The first pillar is our core business, so we more and more consider our findings in our risk models, in our core business, to have to find out whether the risk adequate prices are changing. They are certainly not changing all over the globe, and not for all hazards, but for some we believe they are. Then we think, and this is an important role the insurance industry also can play to support climate change mitigation in this case, if we offer risk transfer solutions for investors into new technologies, clean technologies, then we can give incentives for them to invest their money into these new things where they don't have much experience yet. So, for example, a performance guarantee insurance for photovoltaic panels, which means an insurance against premature aging of these cells, helps the investors to get a constant flow back of the investment, even if the panel after 15 years or 20 years is less efficient than previously calculated. Or it's delivery guarantees for wind and sun, for example, which compensates too little sunshine in a season or a year, or too little wind, and things like that. And this is also an important thing, the asset management. The insurance industry as a whole can play a significant role in changing the patterns of investments from fossil fuels, for example, to clean energies, The insurance industry is the world's second largest investor after the pension funds, with an investment volume of about 30 trillion US dollars. So this can make a difference. We from the Munich Re side, we have an investment program currently of 8 billion into clean energies, infrastructure, which is needed along with that. And we also, certainly our asset managers, communicate with the risk management in-house, and we think we can thus make better informed decisions to invest into the winners of climate change and not to invest into the losers of climate change. I come to the conclusions. We are quite sure that weather-related natural disasters are increasing in number and magnitude. This is based on our own data. We think climate change is real. It can only be slowed down. This is the bad news. It cannot be stopped anymore, but we can mitigate it to a level which perhaps may stay manageable even at the end of the century. And there's more and more scientific evidence that there's a link between climate change and the changing patterns of weather extremes we are seeing. The insurance industry is directly affected by climate change in its core business and asset management, and we certainly have to adapt our risk models. The more and more Nat Cat insurance covers will become part of that. So one reason is there is an increasing awareness that things can happen, as we have seen now here in this country. So more people buy this kind of insurance, so it's part of the adaptation strategies to climate change. And a good example is this large G7 Insure. It's the name of this initiative, by the way, is Insure Resilience, which has taken up some pace now, and in another 4 years, we will see whether it will be successful to get these 400 million people insured. The insurance industry can support climate change mitigation and adaptation by, as already said, providing new insurance solutions for climate-friendly technologies. This means also we create new business, investments into clean energy and energy efficiency projects, and what's also something quite important, and by provision of know-how on disaster prevention. This is what we see. More and more political decision makers see the value of insurance industry in being in these panels where things are discussed, how we can make societies, economies more resilient against climate change. We have a lot of know-how in this, and we should provide this know-how also to the political entities and thus certainly help to manage the future risks. Thank you very much for your interest, and I'm looking forward to our discussion later.